Hello, everyone, and welcome to the Prosperity Through Multifamily Real Estate Investing podcast. As always, I'm your host, Cody Laughlin, and joining me for the first time today, filling in for Mr. John Beatty, is my partner over there, Brian Alfaro. Brian, how are you? Welcome to the show.
Cody, I'm doing well. It was a beautiful day in Houston today. How are you?
I'm good, man. I'm good. I'm excited about our interview today, but before we get to that, want to remind the listeners, if you like today's episode, go to Apple Podcasts, Google Podcasts, and Spotify. Make sure to subscribe to the show and download today's episode. Make sure to leave us a written rating and review. We really appreciate your feedback and help getting the show out there. Also, if we have not connected with you yet, we would love to do so. You can check us out on our social media platforms on Facebook, LinkedIn, and you can follow us on Instagram. And if you'd love to learn more about John, Brian, and myself at Blue Oak Capital, check us out at www.blueoakinvest.com. So, with that, our very special guest today is Miss Linying Zou. Linying, how are you?
I'm doing well. How are you?
I'm doing fantastic. We're really excited to have you on the show. Welcome.
Thank you for having me.
Absolutely. Well, before we get to our conversation, Linying, let's tell the listeners a little bit more about you. So, Linying is an immigrant who came to the U.S. at the age of 10, who defied the odds and succeeded as a trader in the male-dominated world of Wall Street. And I'm looking forward to getting into that. Mm-hmm. So she was a former Wall Street trader in the Northeast, executing $300 million of trades on a daily basis. She was a chartered financial analyst, and a member of the CFA Institute. She bought her first multifamily investment in 2010, 2 years out of college, and became a full-time real estate investor, founded Akras Capital, a primarily female-owned investment firm that syndicates apartment complexes nationwide. So very impressive background, Linying. Tell us a little bit more about that.
Yeah, sure. Well, how far do you want to go back?
Take us back from the beginning.
Yeah, start from scratch.
Like Cody said, I immigrated to the U.S. When I was 10 years old. I've lived in Boston all my life. I still live in Boston right now. So I went to BC for my undergrad, graduated my finance and accounting degree in 2008. And as everyone knows, that's the worst time to graduate with finance and accounting degree. So I spent my first 2 years actually working for an insurance company down in New Haven, Connecticut, doing fixed income analysis and trading. And then I got an opportunity to move back closer to home, working for State Street. Did that for a couple of years, and then I ended up at a small asset management company in Boston, managing assets for companies and pensions. So, from Amazon to hospitals to health insurance companies and things like that. So I was majorly focused on corporate bonds and government bond trading there.
Wow. So the world of Wall Street, for even those who don't know it, and I don't know much about it other than just conversations I've had in the past, but I mean, you got to have some thick skin to be in that game. I mean, it's a tough world. So how did you find yourself imprinting, yourself into that world and becoming successful as we mentioned in your bio?
Wall Street, right? Depicted in movies and the media are generally a very, very aggressive and competitive industry. It is the case. So I work mostly on the buy side, and most of the Wall Street that's depicted in movies are on the sell side. And sell side are largely brokerage firms like Goldman Sachs and Morgan Stanley, and they're sell, right? So I work on the buy side, which is on the other side of their phone, wherein, someone on Wolf of Wall Street is, buying or selling something, they're buying and selling to someone like me. So it is very male dominated. I remember when I was taking, I am a CFA. So when I was taking the CFA exam, that it was one of the very, very few times where there was a line outside the men's room, but no line outside the ladies' room. So just to show you how male dominated it is. But, I really enjoyed that industry. I enjoy the challenges, how quickly everything moves, in terms of trade ideas, it comes and goes. You have to decide on, for very little amount of time, you have to make a split decision on whether or not it's a great idea that you need to present to your portfolio manager or not. So there's always things always change based on news, based on the geopolitics and, on the macro environment. So it's an exciting industry. It can be stressful, but it was definitely a very exciting industry.
Yeah, it seems like you never get a break in that industry. It's just like nonstop.
No, anything could happen at any time. And when the U.S. market is closed, the Asian market is open. So there's always something going on.
Yeah, that's crazy, man. It's like you said, the movies, the way it's depicted, it's just wild to think that that's the really way things operate, are somewhat close. But anyway, and I wanted to allude to, you mentioned earlier how it's a male-driven industry, and I think real estate in itself is that way as well, unfortunately. But I wanted to make sure that we highlight the fact that you're one of two women that we've had on the show, but the first female entrepreneur we've had, and I couldn't be more excited for that, because it's just so inspiring to see people like yourself, women that are just absolutely killing it and crushing it and being leaders for other women in the space. So thank you so much for that. Congratulations. That's awesome.
Thank you.
Yeah. So, okay, so let's go back. So you started you started your career in Wall Street. You began, trading and whatnot. But as we alluded to earlier, you actually started buying investment real estate 2 years out of college. What was the decision or rationale behind doing that as well?
Yeah, so 2 years out of college, it was 2010. And, housing prices hit like record time lows during that time period. And having a real estate investment has always been like an American dream. And my family, my whole family they really wanted to have a piece of like a home or a property they can call home. So I started house hacking. So my first property was a triplex, and I bought it. I lived in one. I rented out the two other units. I did that for a few years, and then I eventually, bought a condo, which I moved into. But the real estate prices that was really, really low at the time, so it made a lot of sense from a cash flow perspective to buy in Boston. And now it's still cash flowing really well. I still own it to this day.
That's awesome. That's great. My story is very similar in that I started investing in real estate 2 years after college, same as you, 2010, and became an accidental landlord. But it's been a blessing to say the least in that journey, having been introduced to me and whatnot. So always interesting to hear other people start. But go ahead.
It's a blessing most of the time, and sometimes it feels like a curse. Depends on if things are going wrong, at the property.
That is true. It's an emotional roller coaster, for sure. But so cool. Well, tell us how, if at all, did your skill set that you developed as a trader on Wall Street translate into your investing strategy?
Yeah, absolutely. So I actually made this transition. So I left my corporate job about 3 years ago. And then, I traveled the world for a little bit, and then came back and started Akras Capital full time. And one of the reasons why I made the transition from being a fixed income trader into real estate is because my skill sets are so transferable. What I was doing in my previous job was analysis, spreadsheets, negotiating, deal finding. I mean, all of those things still applies in real estate. You're just, instead of looking for corporate bonds, from GE, you're now looking for a piece of property in Texas or in Arizona. So, but the analysis is relatively similar too, right? It's about models and assumptions and, what's the exit strategy. So all those things still apply, even though I'm now in a new industry.
That's interesting.
I was going to say, I think, Linying, you make a good point that a lot of new investors sometimes fail to realize that no matter what industry you're in, you definitely usually have some transferable skills. Whether you're doing what you're doing or you're in something totally different, there's usually an opportunity to add value to somebody somewhere with what you've learned in your previous background. So I think that's awesome that you were able to take those skills and still apply them to this day.
Absolutely. I mean, let's say you're in sales, right? That's a skill set that's easily transferable into real estate as you build these relationships with brokers and investors. So yeah, absolutely.
Absolutely. And I agree with your statement as well about, sometimes we tend to overcomplicate real estate, especially those who are getting new into space, but really in essence, it's running a business, right? It's operating a business. And not that that's easy by any means, but that goes back to your point about those transferable skills, and that's just another business, just a different asset type, right?
Yes, absolutely.
So, well, that's great. So, what were some of the challenges in getting started in your real estate investing journey? Was there anything in your upbringing that kind of posed challenges for you in your investing?
I think the challenges came in two different forms. There is the challenge of mindset as I moved from a full-time job into an entrepreneurship, right? So that is a complete mindset shift, which, my friends and family didn't really understand because I had a cushy job as a fixed income trader. Why did you leave that job to pursue something that is perceived as very risky and uncertain? So kind of having to work around that mindset was one. The other one is that, so I've spent 10 years in the finance industry in asset management, and that I build my relationships there, I build my networks there, and things are easy, right? Like, finding deals are easy, talking to people, I know a lot of people. When you go to conferences, I know most of the people there. So that took time to create, but now I'm also in a new industry where now I'm the newbie in the room, right? That I sat in the room at a conference and I know no one. So you get that awkward moment where you're trying to break into circles of conversation and introduce yourself. So it kind of takes me back to when I first started my first job, to have that kind of awkwardness and, and just trying to network without really knowing anyone else in the room.
Yeah, I think that's a challenge for most people in the beginning, right? Is just getting out of that comfort zone and, breaking through those barriers. And I mean, we've all been there. I've been there myself. And, it's just, like you said, you gotta peel it back. You got to break through those walls and just, I think we innately look at the industry leaders, right? And we always see, man, their success. And you forget that they're just everyday people like you and I, right? They all started somewhere. They started from zero somehow.
Right. Exactly.
Nothing was handed to them by any means. So, but you just got to persevere. And like I said, switch the mindset. So I love that. So, so you mentioned, you left your corporate job in 2017, which, by the way, congratulations. I think that's the goal for most entrepreneurs, right? Is to be your own boss. But you said you got to travel the world. That's exciting. Do you feel like real estate kind of helped you to see that through and that vision?
Yeah, I mean, so when I was traveling, when I left for my travels initially, I actually didn't think about becoming an entrepreneur or starting my own company. My initial thought process has always been, okay, I don't like this job anymore. Actually, I hated it. I hate this job. So I'm going to leave, go travel, take a sabbatical, come back and find another job, right? And that's the easy way out. And it was during that travels where, I was on the road for 6 months that my business partners and I got together and got a chance to really talk about what we want in life and what do we really want to achieve and what do we really want for ourselves. So, we decided, that we really want this flexibility to be on the road, to spend time with families, to see the world. And our going back to a corporate job isn't going to offer us that. So we thought about different ways of different opportunities that we can kind of come back to in the US. And one thing that we noticed was that our real estate portfolio, personal rental portfolio at the time, were generating enough passive income to support us while we're traveling on the road. So we basically said, well, why don't we, real estate is something that we can transfer our skills into. We all know it. And it's a fairly secure asset as well. It's collateralized. And so why don't we just take that, grow it, and try to bring these opportunities not only to ourselves, but also to other people.
That's great. I love that. And we talk a lot about this, especially, during situations like we find ourselves out now with the pandemic, right? Where people have been, furloughed or lost their jobs, and that income stream has just been depleted. And, it leaves people in a bind, right? And wondering what in the world they're going to do for next month mortgage payment or rent payment. And it's nice to have that residual income coming in to kind of help ease that burden and just be a buffer, if you will, for the just in case. Or like you said, maybe you want to travel the world and, and still know that you have income coming in the mail. It's just, that's why we love real estate. That's why we love doing what we're doing. So love to hear that.
I mean, it is a financial security, right? No job is safe. And that's something that we realize in our careers, is that you can do your job for 20, 30 years. And then, next day the company could lay you off. And then all of a sudden you have, you're stuck with probably a skill that's becoming obsolete because it's getting replaced by computers. And then you're also, in the, in your 40s and 50s, and you can't really compete anymore, or, you're making too much money, for companies to want to hire you. So it's a really tough spot that if you think about it that way. But if you have like the passive income from real estate and the alternative stream of income, then at least you have that kind of financial security if you ever were to lose your job.
Mm-hmm. Yeah, absolutely. 100% agree. And, again, I love having these conversations with people because, like you said, you talk real estate with some people and they're like, oh my God, that's so risky. And it's like, no, depending on working for somebody else seems pretty risky to me.
Absolutely.
And I mean, case in point, I mean, look at this pandemic that's kind of come out of nowhere and how many tens of million people were out of jobs within a matter of just weeks, and whereas, early in the year, nobody would have ever expected that to happen. So it just goes to show you that I 100% agree. I think if you're dependent on the W-2, you're definitely rolling the dice for sure. So
yeah, exactly.
But anyway, well, cool. Well, talk to us a little bit more about your investment strategy at Akras Capital. So what are you guys focusing on? What's the preferred investment strategy that you guys like to utilize?
Yeah, so at Akras, we are focusing on inline growth cities. So, cities that are gaining a lot of tailwind from demographic, just population moving in, because these cities have lower cost of living, lower taxes, more space in general. So, our portfolio, we're currently focused on in Arizona, so in the greater Phoenix market. But we have assets in Dallas and Orlando as well. But that's really the core. And, we focus on value add. So Class B or Class C on the way, they can make into a Class B value add properties, because we really want to force appreciation. And, if we can create a business plan that we have more control over, it makes much more sense for investors than just a, turnkey cash flow play.
Mm-hmm. Mm-hmm. Yeah. And I like the fact that, I hope the listeners caught on to that. So you're based in Boston, but you're investing in other markets in other areas. And
mm-hmm.
Can you tell the listeners why that is? Why not invest in Boston, your backyard?
Yeah, so I'm actually based in Boston, and my business partners are based in Boulder, Colorado. So our team is also, transcontinental. The reason why we are not investing in Boston and Boulder are really, there are a couple of reasons, right? One, both cities are very expensive real estate wise. It doesn't really make a sense from a cash flow perspective. If most of your listeners probably know about the 1% rule. In Boston, you barely meet the 0.5% rule. So for the amount of capital that you're using to buy properties in Boston, you can buy it for, let's say you buy a 2-family here for $1 million. You could buy a 10-family somewhere else, right? A 10-unit somewhere else. So the cash flow makes more sense in a different state. The other reason why is Boston is a very, very tenant-friendly state. Very tenant-friendly city. Massachusetts is a very tenant-friendly state. I own my personal rental properties here. I still own it to this day, but I would never want to be a landlord here because it's going only to be more progressive. If you look at New York, if you look at California, you can see where that's going in terms of rent control. So, when we look at different cities and different potential markets, that's something that we always consider is, how likely is the rules going to become more and more tenant friendly. And we just want to start to avoid cities like that because we don't want to be put into that position.
Mm. Yeah, that's a great point. And that's a great summary too and I hope that, this inspires some of the listeners that may be kind of feeling a little trapped to their own market is that, you know, you got to be really willing to go really where the deals make sense, right? Where the money makes sense, as I like to say is, and I know I can understand not everybody may have the resources to do that. You know, but I feel like in today's industry, in today's world where we're all connected in some way via social media or whatever, the various platforms out there, it's very easy to connect with people, you know, across the country. And like I said, partner with people that are in other markets or other areas. And actually, Brian, you're part of a mastermind with Hadar Kibi, right? Lives in New Zealand and invests in Arkansas. I mean, you know, 8-hour time difference, I think, and whatnot. But the point being is just like, you know, you've just got to find the resources, but just if it doesn't make sense in your backyard, go outside your backyard, you know?
Yeah. I think the saying is live where you want to live, but invest where the numbers make sense. Right. So I'm pretty sure, Linying, and you can maybe shed some light on this, that you've built a team in Arizona and Phoenix so that you're not having to hop on a plane, you know, 2, 3, 4, 5 times a month to get things done. You've got a team you built. Can you share some information on that?
Yeah, so interestingly, you know, when we first started Akras Capital, this is just a little tidbit, that we had gone to a very experienced real estate investor, and his first advice was invest in your backyard. So he's the type of guy, you know, he's very old school, in his 60s and 70s. He's like, I like to know the neighborhood like the back of my hand. I want to walk it. I want to walk down the alley. I want to know, like, say hi to the barber on the street corner, you know, that kind of thing. And then we looked at each other like, well, this doesn't make sense for us. So yeah, exactly like Brian said, we, you know, for every market that we go into, we do a pretty detailed market due diligence ahead of time. So we, you know, from, you know, just on paper, we look at all the criteria, whether or not this market meets that criteria. And then we start building the team. We start reaching out to brokers on the ground, property managers, and different vendors and contractors, and just building a solid team. We might even talk to a local real estate investor so that he can be our boots on the ground. But we do actually visit our markets. I'm actually going to go to Arizona in October. So we actually do spend like a week or 2 weeks in that market itself to really, you know, build that relationship in person, and then kind of walk the neighborhoods and understand the different neighborhoods that we're investing in as well. And I think it's important too, if you have a property that, you know, that's in that market, you don't live there, it's very important to have, you know, someone on your team to visit it once a month so that you know everything's going well.
Yeah. Great point. Hey, when you go to Arizona, which market are you going to?
To Phoenix.
Phoenix? Oh, awesome. I got a property I'm invested in over there as a passive investor. If you don't mind, swing by, check it out for me, okay?
I'll take some photos and videos for you.
I appreciate that. See, the power of networking. There you go.
Exactly.
But no, you know, again, I appreciate you mentioning that. And that, again, it's such a great talking point. And again, even if you don't have the resources to maybe necessarily fly down there yourself, like you said, I mean, find somebody who's boots on the ground for you, you know, that can be that in-person person for you. You know, the thing I love about this real estate community, and we talk about this all the time, is just how small and connected we are as a community, right? I mean, the more people you talk to and the more people you meet, somehow or another, you find out we're all connected. And at the end of the day, I'm yet to come across anybody who's not willing to lift a helping hand, you know, in some way. I mean, we're all out there to kind of help one another out and add value to one another in some way. And so, you know, everybody's just trying to get to the finish line, right? We're all trying to reach that financial independence. And if we can help each other do that, you know, it's a win for everybody. So, you know, just like you said earlier, break down the mindset, you know, break through the barriers. Don't be afraid. Put yourself out there and just start networking. You never know who you're going to find to help further your business. So,
yeah. I think that's one great thing that I've seen in real estate versus being in finance is the very abundant mindset that this industry has. Everyone's willing, you know, super willing to help each other, you know, open doors for each other and just kind of lift each other up because, you know, I mean, not to sound cheesy, right? You try to make a bigger pie and not take a bigger piece of the pie. So.
That's right. Yeah, absolutely. So cool. So tell us a little bit more about then, again, what type of investment strategy are you using? Are you guys doing this solely in-house between you and your partners? Are you partnering outside of the group? You know, tell us a little bit about your deal structures.
Yeah, so for our first 2 deals, we're fairly new to the game. So we partnered with other syndicators. and we are involved in the operations of the property, but we weren't the lead on it. But we're still very active in it. But as we're now for our deals, we are looking to be the lead sponsor on deals. So we are the owner and operators of these deals. We, come with a business plan, we do the underwriting. And, if we need assistance in any of these areas, like capital raising or asset management, then we do have partners that we've been talking to for a long time. And we can bring them in and, they will offer us different help in the areas that we need help in. So.
Gotcha. So you're really utilizing a syndication model to put together some of these deals. So
Yes.
I love that. Obviously, our show is focused on investing in multifamily, in particular for syndicators, operators that are looking either to get in the space or maybe they're just looking to further their business. But what was it about the syndication model that attracted you to that model? What do you like about it? How's it helped your business grow and go from there?
Our first few deals were smaller deals, actually. So we actually got started buying smaller multifamilies just to get our feet wet. So our first deal was a 5-family, and then we bought 7 and bought 11-family. And then we realized syndication existed because we went to a conference. And we're like, wow, okay, this makes a lot of sense because there's economies of scale of owning a large apartment building. You're bringing investors in at a very, at very good returns versus the stock market or keeping your money in the bank. And this is a really great opportunity because these assets are, they're bigger, so they're easy to manage and, property management fees are lower and you can execute the business plan better because you can increase revenue and cut expenses, right? And have that directly affect the NOI and then directly affect the price of the property. So it made a lot of sense for us on that perspective. So that's why we really started adding on the strategy to our initial strategy, just so that we can bring more opportunities to our investors.
Yeah. I think, Brian, I definitely chime in here, man. I think this is one of the things that attracted us to the idea and concept of syndication as well, is that, like you said, the abilities to have that economies of scale, right? To grow bigger and faster and pull together resources that otherwise could potentially take you a long time to build up on your own,
Absolutely. And in your bio, Linying, you mentioned a freedom number. I think one of the more fulfilling parts of syndication in general and multifamily real estate is the ability to connect with other investors and ask them, like, hey, what are your goals? What are you trying to accomplish? How active are you trying to be? How passive are you trying to be? And how can I help you as the sponsor get to that freedom number, get to that number that helps you, quit your W-2 or that helps you, save for your child's college. I know that's something that definitely attracted us to the syndication model. And I'm assuming that's also what attracted it to you.
Yeah, I think the syndication model allows us to bring a lot more opportunities for investors and really be able to tell them, you can't really guarantee the returns, obviously, but at least kind of based on previous returns, you can kind of lay out the analysis of how do you get to that freedom number. This is achievable because we're doing this. So yeah, absolutely. I think exactly like you said, Brian, that just having these opportunity and being able to market these opportunities to investors is very valuable.
Yeah. The other thing I like about it too, and I mean, you can partner with anybody, across anywhere really, but the thing I like about syndication is it allows you the opportunity to be invested in markets where maybe you're not the primary investor or the lead investor, but maybe you want to be in the market somehow, but you can't really be the active investor. For example, again, I go back to my reference of the passive deal that we're invested in, which is in Phoenix, Arizona. Phoenix is a hot market, but I know I'm not just going to stroll up in there and try to start a new business there. It's just not in my cards right now. Our focus is here in Texas and Tennessee markets and whatnot. But I love being a passive investor in Phoenix. It's a phenomenal market. It's produced some great returns over the past several years. And so I plan on continuing to be there,
Yeah.
So it's just another way to be able to, just expand your portfolio and expand your bandwidth and again, invest in areas that are markets that you may normally not even otherwise be invested in,
Yeah, I think it's very important to think about the progress, right, of being a syndicator too. Like if you're just starting out as a syndicator, it makes a lot of sense for you to partner with someone who are very experienced and know what they're doing, so that you don't make the same mistakes they did, right? And then eventually you get to a point where you want to control the asset, you want to execute the business plan, you want to do the underwriting, because really the entire property and how it does is based on your assumptions, and you want to make sure that you get those assumptions right. So I think there's definitely different steps based on where you are in the process. And, but, being a syndicator as a general partner, as a GP, it's not an easy job. It takes a lot of work. And there's a lot of work going on in the back that, a limited partner, a passive investor may not realize. So it's definitely like, don't go in and thinking that it's as easy as being a passive investor, just get a check, because it doesn't work that way. There are a lot of headaches you have to deal with. Being a GP.
That's exactly right. This is definitely not an overnight success game. It's a long-term game for sure. And there's a lot of bumps and bruises along the way. So, but that's okay. That's what makes us better entrepreneurs and better investors. So, but, well, awesome. Well, listen, I want to learn more about Akras Capital. Tell us, I love this idea that it's predominantly female-owned investment firm. Tell me how you guys put that together. Why did you guys decide to keep it, as such? And tell us a little bit more about your company.
So Akras is predominantly female owned because there are 3 of us and 2 of us are female. So, how did it come that way? Well, who knows? But yeah, so my business partner, Christina, and I are female, obviously, and we have a third partner, Charlie. And, we started Akras together because our skill sets are complementary. I actually knew Christina for a long time now. We worked together at our last job for 4 years, and then now we've been doing Akras for almost 3. So I've worked with her for almost 8 years now, and we know that that our goals and ethos align, and that her skill set is complementary to mine. And then Charlie is more of we call him the pretty face, but no, he's the marketing and capital raising person. So he's the investor relations, he's generated a lot of content. The website, mostly of that is his work. So we have a, very good role definition of our business, that we focus on different areas. That's our strengths. And that that's what makes it work. And then we really share the common goal that, we want to generate freedom, and we want that in our lives. So that's really important as well.
Yeah, I love that. And when we talk about business partnerships, I think it's so important for people to understand it's very easy sometimes to get involved in a business transaction with people that you think you trust because they're your friend, or, oh, I've known them for years. But really what it boils down to is you really want to make sure that you know exactly who you're dealing with. And like you said, they have the right skill sets that complement your skill sets. You have that alignment of interest. I mean, these transactions we're talking about that are multi-million-dollar deals. I mean, if a transaction goes bad because of a bad partnership, I mean, it could really affect your business long-term. And so you really want to make sure that you're getting involved with the right people. And so, like you said, having those people that you trust is so huge. I would encourage anybody that if you're thinking about partnering up, which I'm a advocate of. Obviously, we have Brian and John as part of our team. Take your time, vet the people that you're going to work with, and don't be afraid to ask the difficult questions, because it's better to find out up front than it is to find out later when you get in the deal and you're knocking heads against each other. And Brian, I don't know about you, we've seen some opportunities come about from bad partnerships. So.
Yeah, you never quite know. Things can sometimes fall apart because, like you said, people don't do their due diligence with their partner. And it's not so much just the dollars and cents. Sometimes people focus too much on, your net worth, your liquidity, how much money can you bring to the table, and then checking those boxes, but not necessarily looking into the person's character. Do they operate with integrity? Do they have good moral standards when it comes to business? When the going gets tough, how do they respond in those situations? So I think, if you're a passive investor, vetting the sponsor and asking questions like that. And then if you're looking to partner as well, like Cody said, making sure you're just doing your due diligence on the person the same way you would do your due diligence on a multifamily property.
Yeah, I mean, we take that vetting process the internal vetting process to our external partners as well. We don't get into a deal because someone calls us and say, hey, we need you to raise money. Because we try to establish long-term relationships, and all of our partnerships that we have going on right now, that we basically have bi-weekly or weekly calls with them to discuss updates or deals or how they underwrite. Do you place your investors first? Things like that.
Mm-hmm. That's great. That's great. So what's the long-term strategy for you guys, or what's the long-term goal rather? I mean, obviously, you guys are doing this full time. You've got your partners in place. You mentioned the markets that you're invested in. Where do you see Akras Capital going over the next several years?
So for us, our short-term goal is really continue to buy these assets and generate a portfolio of assets to continuously grow those cash flow over, right? And eventually we do want to get a point where the founders want to step into a more strategic position. That way we're basically hiring people to do the operations of the business. And that way, it affords us the freedom to look at more deals and, take a more strategic role in the business. That way, you can kind of look at it from like a top down instead of like, being buried into day to day. So that's really the 5-year goal, is that, we will get to a point where someone else is we'll hire someone to do the daily operations of business. And then we're doing more strategy role.
Linying, it sounds like you've read the E-Myth where they talk about, working on your business and not in your business. It sounds like that's the strategy you're trying to execute long term.
That's the first book that we read as a team. My business partner, Charlie, has started many businesses in his past. So when we're saying, okay, what's the first book we should read? We actually read the E-Myth for real estate. No, I think we just read the regular E-Myth. And then, so we actually had that discussion, and we started a lot of system process so that if we hire someone, we can easily hand these things over to them.
I like that. I haven't read that book yet. I'm gonna have to check it out, Brian. But I know I'm slacking. But it reminds me of Neil Bawa. I love what he says. Right, he started like 11 different companies, and he always says his number one goal when he starts a company is to work himself out of a job. And meaning, right, is like he builds the business up to where, as you mentioned, I put people in place, whether that be VAs or assistants, whatever it is, so that they can operate the business, and then I'm just looking from the top down and.
Yeah, Neil has a very, very elaborate VA structure going on in his business right now. I am super impressed by how many VAs he has as managing VAs. I mean, he only has a manager of VA managers. It's crazy, like I wish I could do that, but that does take a long time to build, and it's quite amazing to see.
It is, man. It really is. And like you said, to be able to adopt a model like that would be pretty exciting. But well, Linying, man, it's been a great conversation, and I know we're kind of getting near the end of our time here, but before we wrapped up, I had a couple more questions for you, and then we'll call it a show. So tell us, what are some things that you are doing for your continued education to kind of further your investing?
So I think they're mostly through books. So we read a lot of books on not only on real estate, but also on negotiation, on mindset, on meditation. So, all across the spectrum, because I think, just having the right mindset, as I mentioned earlier, is super important to be an entrepreneur. There are so many challenges comes up day to day, and you have to kind of split your personal life versus your business life. Just having a right mental fitness is key. So we read books on all these different subjects. And then obviously we listen to webinars and podcasts and things like that as well.
Awesome. Excellent. And what are some of the lasting lessons that you've learned along the way that'll stick with you?
Lasting lessons. Invest in real estate early. Just really, really vet your partners and sponsors and understand, how they're underwriting deals, what their assumptions are and what their projections are, because that's very important. Don't go crazy over what they're showing you. Go underneath the numbers.
Yeah, that's so huge. Again, I'm so glad that we brought that up and you mentioned that. That's so important. And Brian, by the way, did John ever do a background check on you? Did he ever tell you about that?
John told me he does a background check on everyone he meets, so
Yeah.
I would not be surprised.
That's the only reason we got a scheduled first lunch meeting we ever had was he did a background check and said I was
got
good.
The green light.
So. Well, Brian, given the Brian's here, I guess you passed the background check.
Yeah, he must have. So, well, that's great, Linying. So, can you tell the listeners? Can you give them any advice? One or two things that you think that would help them grow their business.
Yeah, I mean, I think if you're getting started in real estate syndication, being a passive investor is a it's a great way to get involved. And don't be afraid to ask for help. If you need assistance in looking at a deal, shoot it around to different groups, ask for their opinions. Maybe they know something that you don't know. Maybe they know how to ask the right questions. So I think, in this industry, everyone's very willing to help each other. So as long as you're willing to reach out, people usually don't say no.
That's such great advice. I absolutely love that. That's huge. You got to drop the I'm a mentality and just, be okay with relying on help from others. That's huge. I love that. Thank you so much for that tip. Yeah. So tell the listeners how they can get a hold of you and learn more about you and Akras Capital. Excuse me.
Yeah, so you can visit our website at www.akrascapital.com. We actually do have a monthly newsletter that goes out. It's a lot of educational content and insights about markets, and sometimes it has other fun stuff. And we also have, we also do white papers. I think the most recent one that we did is called The New Roadmap to Financial Freedom, and you can download that on our website too. And you can always reach me at LZOU@akrascapital.com.
Excellent. Awesome. Well, Linying, thank you so much again. Great conversation. Again, thank you for being the first female entrepreneur on the show. We hope that you paved the way for future female entrepreneurs here, and just continue. We're excited to continue to see your success and the growth of Akras Capital. So thank you again.
Absolutely. Thank you.
Thank you. Thank you so much.